S&P 500 dropping and a lot of other things that have happened, including possibility of the acquisition of Google and Wiz, and also other strategies that we are using to make sure that we make some income using covered cost strategies. So in this Streetwise Economics Weekly podcast, we are going to be discussing about all those things with my colleague here. I'm so excited to have you on the show. Coach Blooming, welcome.
Thank you so much, buddy. Let's jump right into the market.
Definitely. So the first thing is let's go and see what's happening in the market in real time, and then we will go deeper in terms of our analysis. So what you see here is the S&P 500 index, and this is the weekly chart, and this is what we call trading view. And I like to use this because it kind of like, it's very good for my technical analysis. So what you see as the red lines, they are supply zones, and the ones that are darker, they are demand zones, basically levels, which in most cases, if the security comes to this, buyers will be in control there by the price going up. So what we see this week is that, in particular, the S&P 500, and this is actually for, let's look, if we look for the week, and this is what we have. We see that it has been on a downward trend, right? So that SPY has been on a downward trend. If we look at this, it actually went down this week alone. It actually went down 1.89%. And you will see that right now, as we are talking, today it opened at this level and it's actually recovering, which is something that is interesting. Similarly, I can say that you see most of the stocks here in the morning, they were down. If you look at NVIDIA, it was down. There was a lot of volatility. There was quad witching. That's something that we are going to make a comment about. But broadly, the market has recovered. Probably it's because of President Trump's comment. What do you think, Coach, has been causing the market to recover today, at least? But it's not yet at the level where it was. If you look at the S&P 500, it's still below this level where it was at the beginning of the week.
Yeah, so I think that based on the volatility that we've been experiencing, especially since the beginning of this year and even this March and the later part of February, there's been a lot of uncertainties, especially given the tariff
Yes.
and even a lot of things about, for example, how long is the tariff going to be, what are going to be the implication of that. And also on Wednesday, we heard Jerome Powell talk about, okay, keeping interest rates steady. So there's still a
Mhm.
lot of uncertainties in the market, even though when Jerome Powell finished his whole speech, the market was positive. We started seeing that the market was reacting positively to that. And maybe that is still carrying forward into today, Friday, that we're doing this recording. But in as much as we're having those green days, I'm still a little bit careful and I'm still very um I'm taking a cautionary approach because yeah,
Yes.
the market is green today, but something might happen on Monday and you will just see a sea of red. So I'm not taking whatever is going on in the market today as just a signal that we're already out of the wood. No, but I'm just saying that, hey, it's just like whatever, maybe we're having a red day or a green day, but the fact that we're having a green day, I think that the market is also reacting positively to the fact that Jerome Powell gave kind of an upbeat speech too, like, okay, we're
Yeah,
gonna
and
stay
they
stable.
also revised their economic projections and
Yeah,
their forecasting, economic forecasting, which is something that I think it's something that is evident because if you see other economic data points pointing to the possibility of uh, the GDP going down, that's the fact. If
yes,
you are seeing these layoffs, if you are seeing
yes,
inflation starting to resurge,
yep.
that's the reality. And these tariffs, what I think is that they are causing a lot of uncertainty. Now, which could be an opportunity for long-term focused investors to say, look, if you are able to understand the businesses that are wonderful and you get in at the right price, that would be a wonderful opportunity to possibly make money in the future if those particular positions go in your favor. But again, as we always say on this channel, we are talking about what we are doing, and this is supposed to be just taken as educational content, even entertainment. Two friends who love to talk about what's going on in the market. And even though we play with our own money, the goal is to grow our respective portfolios. But indeed, there are risks and opportunities. Now, under this challenging macroeconomic environment, coach, I understand you and I have been making some money writing cover calls. And today, and even actually yesterday, we managed to do some vertical put spreads, which is something that I didn't do. And I will say on my trading, I managed to make almost like 151 on dollars on Apple position. That was my first vertical put spread, right, on Apple. And it's something that I'm learning. Can you also share how you are actually, making some income
Yes.
this volatile
So,
environment?
yeah, I think despite the volatility in the market, it's also essential to understand how can we strategically still position ourselves to still make money in the market. And one
Mm-hmm.
of the ways that I do this is just by selling covered calls. And
Mm-hmm.
even before I explain what covered calls are, I think it's also important to know that whatever strategies that we're saying, these are just strategies that we believe in personally, and this
Yes.
might not work for everybody because
Very
you still
important.
need to
Yeah.
understand your own risk appetite. So
Yes.
if I'm saying that I'm selling cover call on Tesla, Tesla is a very volatile stock, and there's
Indeed.
always that tendency for you to panic, which I have also experienced. I've experienced
Yes.
the fact that, oh, I sold a cover call 250 and I panic sold. I'm like, oh my
You
goodness, I
up, it
need to,
was a 251, right? And then what
yeah.
that means essentially is you've locked in the gains, the shares will
So,
possibly be called away, and you may lose. But the good thing, if your strike price is above your buying price, then you can still make the profit as the difference between your strike price and the buying price plus the premium, which is a good deal. But if you're a
yes.
long-term focused investor, you might lose your shares that you would have wanted to hold.
Yeah. So it's just important to know that whatever strategies that I'm taking, you need to be aware of the risks associated with it.
Definitely,
But
yeah.
for me, I just feel like, okay, I already own the stocks, and these are stocks that I plan on holding for the long term, and I'm just writing cover calls on them. And even apart from that, whatever income that is being generated from that, I then use that to buy extra shares since the stock market is
Hmm.
actually down right now. So that's just a simple way that I'm using the market, despite the volatility, to still generate income in the market and not having to panic sell. Because most times, what I've learned is that I'm just listening to people that have been investing for several decades, is that the best time to buy is in the bear market. And
Yes,
if the market is giving us an opportunity to pick up quality stocks at a discount, then
yes.
I would just be buying. A lot of people would not want to buy during this bear season, but personally, given my own risk appetite and my investing horizon, which is at least 5 to 10 years, I see this as a great buying opportunity.
For
Again,
wonderful
market,
companies.
yes, again, the market can still dip.
Mhm.
And if it dips further, I'm excited. I was listening to one of Buffett's recording just yesterday, and he says
Yes,
that anytime I buy a good company and the price drops, like the price of the stock
excited.
drops, he's very excited to buy more.
It's not
But
scared.
yeah, you see a contrary move from beginner investors, meaning that they buy a stock today at $100 and they expect the stock to go to 150 tomorrow. It doesn't happen. The reality of the stock market is that you might buy a stock today at $100, it can go to $70 next week. It can go to $80 next week. It can go to $120 in a few weeks. So being able to manage your emotions when investing, I'm saying, is one of the finest skills to just develop in the stock market and even in crypto. So
And
yeah.
yesterday, I actually, not yesterday, that was on Wednesday, I had the privilege of talking to one of my connection that I was connected with my mentor. And this connection actually had the privilege of managing almost $500 million. And one of the things that I learned from our conversation was that he said that in the short term, the market might be, there's a lot of uncertainty, right? So if you are right and you get in wonderful companies, eventually the market, because it's forward looking and it's something that we have said here, over the long term, the market will always be right in terms of its pricing because all that those distortions and that information would then be priced in, right? And when the moment most retailers and other investors say, wow, Apple now, for example, and in interest of full disclaimer, I actually bought some shares for Apple today and I wrote a covered call on the position today. And that's not to say it's a, it's an investment recommendation. It's something that I'm comfortable with because I saw it going down to 210 after I got from the position of the vertical put spread, right? And then for me, Apple is a wonderful company, right? Companies that have strong fundamentals. And again, I could be wrong. But if you then have a covered call, now it means it's a hedged position because if it drops, I can still recover some of the money. If it goes
Right.
up from that average price to the strike price, I can still make some money. So that could be another great trade, plus I get the premium. So in this volatile market, what I'm learning is that sometimes just doing nothing is a very good strategy if you don't know what you're
Which
doing.
is very hard for a lot of people to do. The fact that just buy a stock and don't do anything. A lot
Yeah.
of people want activities in their portfolio, but if you look at strong investors over time, they do the most boring thing. Just buy and let the thing just do its thing. Let the
Yes.
market perform what it needs to do. And that's just one of the keys to winning in investing is that buy fundamentally strong companies. And if the market gives us a bear season, a bear market, keep buying. And if you can generate
Mhm.
extra income with the same underlying stocks that you have by selling covered calls, that again is just a way to still turbocharge your portfolio. But again, we need to always emphasize the need to understand the risks
What
associated
you are
with it.
investing in. You have
Yes,
no
the
business
risk.
investing in things that you don't understand. And
Exactly.
again, the most important thing now is look, people would say, how do I then understand? I didn't do finance in school. There are financial advisors out there. Go to a specialist, but Coach Blooming and I, that's what we do. We are not financial advisors, but we have the experience to actually coach just for educational purposes to say, look, this is what I'm doing, and this is why I'm doing this. And I wanted to say, you see, the most important thing also is to have an emergence fund as well. And then you understand the things that you're investing in, but always have some cash on the sideline because life is not guaranteed. So if you then have the cash, right, then you can buy those wonderful companies and find other income stream generating strategies. And I was watching a video, and I do a lot of research, as I'm sure you also do, coach, of the wheel strategy of making money using options, right? And options are very risky, especially if you don't understand, but also they are safe. From what I'm learning, if you are only taking risks, like for me, I don't like to take
Calculated.
naked options, whether it's a naked put or it's a naked call. In other words, if you are taking a call, you are betting, you're bullish, you're betting that that particular security is going to go up and you make money from that. There are of course other things, the delta and all other parameters that you have to understand. But if you are bearish, then it means if the stock drops or the security drops, then you are more likely to make money. Now, I wanted to say when I took the vertical put spread, basically what happens is that in this case, I was betting that Apple, was going to, the strike price that I took was $230, right, in 180. But I was going to start making money if it dropped to $214.14, right? But because there was going to be quad witching, which is usually uh, it happens, I think, every
Every,
quarter, right?
every,
Eh,
yeah, every third
Every
Friday of the quarter.
Yes, and what happens is like, contracts, options, you are looking at futures, contracts, options, contracts, they expire. So usually what happens is it's very volatile because sometimes people might be thinking it's going to be bearish and then it goes bullish. So
Mhm.
a good strategy sometimes is to stay out of that extreme volatility because if the trade doesn't go your way, then you lose. But if you can calculate your risk premium now to say, okay, I am going to be risking, let's say, $500 to make 1,500. So there's an asymmetrical risk. Then you calculate your probabilities, which again, nobody can really predict with certainty. I'm fine
Mm-hmm.
with that. But what I am liking right now is doing covered call strategies to just say, okay, I have 100 shares of, let's say, for example, and in the full interest and disclosure, I own Amazon. So if, as an example, if I want to write a covered call, let's say I got in at 197, and then I write a covered call, let's say for weekly, I can possibly collect, let's say $150, right? For next week, right? If with a strike price, let's say of $200. So by next week, if it doesn't hit that, I collect the premium, but I still hold the position because I fundamentally like the stock because I believe it's a great stock, it's a great business. So that's another way of just generating money and also actually turbocharging the returns. Because if I
Yeah,
can make 150, 150 at the end of the month, if I may do that weekly, that would be, let's say, 150, 150, 300, $600, right? It
yeah.
also lowers the cost basis for my average.
And I think one important thing to really emphasize here is the fact that the reason why we're comfortable even talking about covered calls or any other strategies that we're
Yeah,
taking in the market is because we've taken the time to study. A lot of
yeah,
times when we share what we're doing in the market, saying, hey, I made $1,000 selling covered calls,
yeah,
I made this. A
yeah,
lot of people just see the end result without seeing the work that has been done for the past 4, 5, 6, 10 years,
yeah,
just understanding the market. A
yes,
lot of times people want the final result without putting in the work.
yes,
Again, investing is honestly truly a lot about how you can manage your emotions and also the knowledge. Invest in the knowledge. The knowledge is going to yield multiple dividend over the years. Isaac and I were having these conversations today talking about selling covered calls and all of the other strategies. But don't forget that it's just, I like to use this analogy of a
yeah,
duck on the water, right? You can't
yes,
see the effort that he's using to paddle. You only see, oh, this duck is so
floating. Yeah,
unruffled, right? But
yes,
you don't know that it's paddling really hard just at the bottom. So again,
yes,
it's important to know that invest in the knowledge. And I'm always a big proponent of learning from practitioners, not
yes,
just somebody that has a title that is not a practitioner. So
yeah,
the difference between somebody that has, oh, I have this license, so but that person has never practiced. It's just like me going to learn how to drive, but
yes,
I've never driven a car before. Like I
yes.
can say, oh, I've taken the test on the computer, but I've never been behind the wheels of a car. How would I win? Like, no. But
Yeah,
when
and
you
literally, sorry
practitioner,
to jump
yeah,
in,
go
when
to
you
a
then even
practitioner.
get in, let's say there are a lot of moving parts. Let's say you're driving here in British Columbia or anywhere else, there might be other cars. There are a lot of variables, even the road signs and stuff. There might be even drivers who might be just cut you. So there are a lot of other things. The same way happens with investing. And one thing
Yep.
I also wanted to emphasize, coach, is that for me, we spend a lot of time researching these stocks. So if I am comfortable with Amazon as an example, and it's not a recommendation, and right now I've started building positions on Walmart as well. I have done some research. I understand their
Mhm.
financials, their free cash flows. I understand, like this is a business. What service do they provide?
Yeah.
And what is their historical performance? Not necessarily as a way to predict the future, but I want a track record, right?
Hmm.
So eventually, these are companies that we want to hold for the long term, right?
Yep.
But we realize that this is a very volatile market. You wake up, President Trump today, he was talking about the flexibility on the tariffs and also some developments in their defense system. And also,
Yes.
you wouldn't also miss the opportunity to talk about wanting Canada to be the 51 state, which, I mean, this is not a political platform, but at the end of the day, there's a lot of things that happen, right? So to be a successful investor, you really have to understand if you are taking a covered call, if you're buying a stock, or if you are selling, understand why you are doing it. If you don't, go to practitioners. That's what Coach Blooming and I, what we do. If you want to
Mhm.
learn, not as investment advisor, but coaching, right? Or mentorship, because we have people on the group who may have some questions, but we spend a lot of time, right? So at least that comes with some consultation for our time. And sometimes we subscribe for resources that we use, right? So I think that's something that is very important. Educate yourself and understand that trading and investing, they are different. Trading, it's me just getting in for a few seconds or sometimes swing trading, right? And then getting out. But my strategies, I also want to know that this company that I'm trading has strong fundamentals in case I got stuck in there, you know, and I don't
Right.
want to use leverage. That's another important thing.
I think is even as the market continues to unravel and we're seeing, oh, what is going to be the impact of tariffs? What is going to be the impact of inflation? Or if Jerome Powell already said, oh, we're expecting about 2 rate cuts this year.
Mhm.
All of this, we're not even sure what the impact is going to be. We
Yes.
saw even just this week with the acquisition. Okay, well, the acquisition is not yet final, but Google and Wiz, the deal, I mean about $32 billion. All of this is just signaling to me as an investor that this new administration is preparing the ground for a strong economy over the next few years. But it's also telling me that the next few months or the next few weeks, in preparation for laying the groundwork for the next few years, might be a little bit shaky.
Yeah,
And
it's
again,
turbulent times. Yeah.
yes. So, but despite all of this, if we look at historically how the US market has performed, specifically the stock market has performed, we tend to come out of this bearish season. We're in correction territory now, but for some stocks that have dropped 20%,
Oh,
30%, 40%.
people are getting smoked. And I was
Yeah,
sharing with you,
yeah.
sorry to interject, a story of someone
Oh,
who got into DJT, allegedly from the money that I saw it on Reddit, that they got inheritance money from. It was almost 1
mhm,
million, and they got in a DJT. It was down by 40%, right? So
right.
that means 400,000 was gone. And
Which, yeah. Which
it
means
continues
you need
to,
to know.
you
You
need to
need to know what
understand.
you're doing. You need to understand. It's so important because there's so many things moving in the market, and
Yes.
just simply investing some time to learning. It's one of the differentiating factors because when the market panics and everyone is saying, oh, I'm selling my stock, you'll see seasoned investors, they are busy loading up because they understand that the tides are going to still change eventually. But again, I know it might be like I'm over drumming this, but the knowledge is the differentiating factor. And once you invest in the knowledge, it's going to pay you over and over and over and over again.
Coach, I
Again,
can
money
ask
is
you
a
a
game.
question, right? So,
Yes.
in terms of your journey, because people, viewers might say, how, I didn't start finance, how can I be as knowledgeable as you have become? What sort of resources do you use to that
So
level?
it's just like saying somebody, it's just like somebody telling me now, hey, Blooming, I don't know how to drive,
Yeah.
or I don't know how to use the internet. None of us knew how to drive the day we were born. None of us
Mhm.
knew how to use the internet, but we learned. The hunger to learn, the hunger to succeed is going to make you curious. The curiosity. If you don't know anything about the stock market, go, there's something called Google. There's something called
Yeah.
YouTube. Just the basics.
Yes.
Understand the basics because there is no way you can win with money without understanding the
But there's a
game.
lot of there's a lot of I would say stuff that
A
is
lot
not
of
really. Again, that's
that
why we are
is,
creating this content. Start by educating yourself, and we are not
yes.
implying that we are the monopoly of this, but we are just talking about the experiences that we are talking about practical things, right?
See, like what I've learned is that
Yeah.
if you want to learn anything, you can go on the internet. But but the moment you go on the internet, it's not as if everything is well laid out for you. No, it's not.
Mm-hmm.
And that's where the role of a practitioner and a coach is saying,
Yeah.
hey, if I were to be in your shoes, I would take it this way. The lesson you're trying to learn on your own, when you employ the knowledge and the wisdom of a coach, you get to where you're going way much faster.
Yeah.
I'm not saying that you need to come to Isaac or come to
Yeah.
me.
Yeah.
No,
Yes. Yeah.
it's whoever appeals to you. But
Yes.
I'm telling you that I pay for knowledge. There are people that they will tell me, oh, for 2 hour session with you, I'm going to charge this. I'm going to charge
Yeah.
$500. I'm going to charge $1,000. But because I want that knowledge, I will pay for it. People don't pay for knowledge. If you don't pay for knowledge, you won't get to where you're going way much faster. And I'm just saying that, hey, we are not a custodian of knowledge, no, but you can go on the internet.
Definitely.
But if you want somebody that is saying that, hey, I've been in this game, this is some of the mistakes I've made, let me teach you this, and you're going to get to where you're going way much faster and
Mm-hmm.
you compound your returns better. So it's just something that, again,
Yeah.
it's not rocket science. You can learn how to invest. You can learn.
Yeah. I
Yeah.
think for me, reading books, but also I like to read Wall Street Journal. But I think I have the advantage as much as you do, coach, having like a background in finance. Now, in terms of the economic data, I think sometimes there's fundamental and technical analysis. So if you're looking at technical analysis, like I just showed you, there might be some potential resistance level. That's what I normally use when I'm trading. But I like to look at the fundamentals of their business. Like, are they profitable? Do they have some cash on their balance sheets? And do they have great management and also competitive advantage? Now, I know you own Tesla stock. What is your outlook on Tesla stock? Because, it has been very volatile, going up. Right now, it was trading, I think, around $240. It was at $222 this week as well. So, how are you stomaching all this volatility?
So, like, for me, I'm a long-term investor in Tesla. Whatever short-term volatility that we're experiencing, again, it's just short-term. If you understand the product, and I understand the product, and I understand the potential,
Mhm,
Tesla is not a car company. It's just like saying Amazon is a bookstore. Tesla is more than a
mhm,
car company. This is robots on wheels, and not just the opportunity for full self-driving. That is
mhm,
just one. That is robot taxis. That is just one. But the bigger game is even Optimus. That is when, again, labor is gonna be commonplace, because now there are robots that can do what we humans can do. When I think of somebody that is coming to pick up the garbage can, and I know that a robot can do that, or I know that the car is smart enough to drive me, there's so many things that are going to unfold in the future for Tesla that we can't even see now. I was listening to the call that Elon had with his team yesterday,
mhm.
and I'm seeing a future that a lot of people cannot even see yet. That is where the helper comes in. When you see a product that the market doesn't understand yet, and you're able to position yourself strategically into this, you're going to win. But I also have to put the caveat: Tesla is a very, very, very volatile stock. And even right now, it has
Do you
become a
see any
political
risks, coach?
stock.
Yeah, I was going to, because I
For
think,
me,
yeah,
the
there's also a
risks,
possibility
a
of
lot of
downside.
people will say, man rigs. Some people will say, okay, what if something happens to Elon? Or for example, or what if people keeps burning Tesla cars down? Those are things that are temporary. Because why? Anytime a product comes along that makes my life easier, better,
Mhm.
and it makes our life just richer, we gravitate towards it as humans.
Mm,
So I try
mhm.
to separate the noise from the meat. Is
Yeah.
Elon very controversial? Absolutely, 1,000%. But I
But
also,
isn't that also hurting the stock? And I mean, I always try to be respectful, right?
people that
But
don't
I'm just
understand,
bringing, and again, this is not investment advice, right? I'm just kind of like trying to uh, bring some perspectives, right? To say, look, the reality of it right now is, you see, we'll see the numbers when they deliver, like the quarterly numbers, like
Q1
when they
might be
announce.
worse.
Yeah,
Historically, Q1
yeah,
is usually one of the
yeah.
worst
And
seasons. Like,
then the brand reputational damage, with Elon being at the center of what's happening in the US administration currently. But there's also these other aspects, like, you see, what is happening is that, um, there might be tariffs, but there are companies like BYD, right, that are also doing competitors, particularly in China. But also, there are also other issues I wanted to just emphasize there, to say the reputational damage. But let's take, for example, Berkshire Hathaway, for example. Do you think Berkshire Hathaway would still be the same, God forbid, if Warren Buffett is gone today? Right? So
I
I
think
think part of it, there is some percentage on the stock value right now that is attached to the legendary investors, insights and experience. So there's a possibility of some discounting there, to say, look, if, let's say, God forbid, if something happens now, right? Of course, it's a going concern, there's a board of trustees and all these other succession plans and stuff like that. So I wouldn't say it's a non-event, right? It's a possibility, it's a downside, but at the end of the day, we are looking at the balance of probability of the risks versus reward, right? So in this case, you see that you are very bullish on Tesla. You see the possibility, and I think it's done out. He says maybe a 1 trillion possibility that is going to be unlocked with the self-driving, Optimus, right? And a lot more other exciting products. But it's a possibility. And if you are right, and as you have been on Tesla, my friend, you are going to make quite a bit of money. But I also want to say, in conclusion, my friend, before you can jump in, to say I also like to have a diversified portfolio, even though I would be very bullish on one stock. In my case, I don't own Tesla right now directly, except a small position on the ETF, because I changed my portfolio in my strategy right now, at least. And that's my honest view. And I, at some point,
yeah,
probably might take Tesla, but with some caveats on it.
it's important to understand the type of investor that we are.
Yeah,
And if we don't understand who we are as a person or who we are as an investor, we tend to copy other people.
yeah,
Why am I so bullish on Tesla? It's because I've spent ungodly hours understanding what Tesla does, the leadership, what gives them the competitive advantage. We're talking about BYD in China.
yeah,
How profitable are they? If you compare the profitability of Tesla and you strip out for BYD just electric vehicles, not hybrids, because hybrids is not going into the future. If you strip out
Are
just
you, are you,
EVs,
are you sure about that?
1000%, because if you study people that understand this space, why would you go into a future that is going to be hybrid when the car is going to be smart enough to drive me around? It goes back to the competitive advantage. Anything that makes my life easier, richer, simpler, I'm going to do it. It's just the same way that I won't drive 1,000 miles just to go and place a phone call when I have my smartphone. The same thing is happening in technology with vehicles. A
But
lot of
did
people don't
you,
see that picture yet, and it's
sorry
okay.
to chime in. Did
It's
you
okay if
see
people don't see that.
the latest development that BYD, they developed a charging system, I think, that can charge like for 5 minutes. But
Just like
may I just finish this?
it's
I
okay.
wanted to say, you see, what I also see in terms of the geopolitics, if the US and Canada, for example, they didn't use tariffs to keep away, like to stop these Chinese vehicles to come in and on a fair, without these tariffs, right? I think I see BYD and other Chinese car companies as a serious competitor as well. And I'm
You're
not
looking at
discounting them.
Tesla,
Yeah.
but we are not talking about other car vehicles. We're not talking about Ford. We're not talking about GM. when Tesla came into the picture, there was nothing about electric vehicles. Now we're talking about electric vehicles, and this is even minute compared to Optimus. A lot of people don't see that yet, and it's
No,
okay.
I totally agree.
Okay.
I
When
totally
we talk
agree
about the charging,
on that
let me
on that.
finish my
Yeah.
thought. When we talk about the charging that BYD did, it's just like me saying that, oh, there's a company that just developed a better charger for my iPhone. No, that's not the big picture. That is not the big picture. It's just like me saying that, oh, I can go to the gas station and this gas station can fuel my car within the next 5 minutes or 10 minutes. It's not the big changer.
No,
That's not the
but they're
game
also
changer.
doing, like in terms of deliveries, they are beating
Minute. It's so
Tesla as
minute.
well. Yeah. In
It's
terms,
so minute
have
because
you
why?
seen their
It's
delivery
minute.
numbers? I think
If you
we'll
strip
do an
out
analysis,
hybrids,
you and I.
no,
I'm
if you
not saying
strip out the hybrids, let's focus on
why.
E
Do you think
versus
the energy, like,
when you're doing the
petroleum
comparison.
and
No,
stuff, they're
when
just
you're
going
doing
to go away?
comparison,
I
no,
don't
when
think
you're
it's
doing
just
the
going to go away.
comparison, compare apples to apples. We don't compare, oh, I'm going to compare hybrids and EVs and model that together with just EVs. That's not a good comparison. But if I put EVs and put another EV, that's a good comparison. The same thing for Tesla. Tesla will not appeal to everybody, and it's absolutely okay.
No,
But I'm not saying
I
that
just
the
wanted,
Chinese is not competitive. They
I just wanted to be clear. I'm not I'm not saying like Tesla is not a great business. Okay, get me right there. But I was just
That's
throwing
not what I'm insinuating.
some caveats. I just wanted to clarify that. But I was just saying, look, when I'm looking at these things, they are serious competitors in the, in the
Mention the
landscape,
competitors. Who
and
are the
also the.
competitors?
May I
When
finish?
we look at the competitors, who are the competitors? We need to look at the numbers. What is the numbers telling us? Not just saying that I have a product that can charge the car faster. Okay, that's good. But is that a game changer? No.
I mean, may I
Let's
finish?
look.
May I also
Yeah,
explain?
yeah.
Yeah. So what I was just explaining, my friend, is that I'm not discounting Tesla at all, but I'm just raising some things that I consider to be pertinent to say in terms of the car deliveries that way, whether you're looking at hybrid.
Not the big
Let
picture.
me finish without
It's
disruptions.
not the big picture.
Let me finish without disruptions. Then
Let me-
so I was saying, look, I'm just objectively looking at this, and I understand what you're saying to say you have to compare, you have to normalize the data to compare. And Tesla is by no means, it's a fantastic business, and they are at top in terms of the electrical vehicles. But as far as I understand the reality of it here, there are some people who prefer hybrid, and there is a lot of money that has been invested in that energy. We're looking at gasoline and all these businesses. So I don't think that's something that might just disappear in 5, 10, 15 years, right?
No, it's not going to
Yes.
disappear 5, 10, 15 years,
Yes.
but is it going to be here in the next 40, 50 years? Is it
I
going to be
don't
here in the
know.
next 30
Nobody
years?
can really predict the
It's
future
just
with
the same way
certainty.
that
Yeah.
the white, okay, I like to give analogies because history has given us a lot of lessons. Today, if I want to learn about anything, any word, I don't go and check a dictionary. No, if I want to go to any place, I don't go on a horse. But back in the days, people used to ride horses to work. The same thing for hybrids. We might say, oh, is this going to be here in the next 5, 10 years? We don't know. But I know something for sure about human nature. Anything that makes my life easier, better, richer, I would do it. And I'm seeing that playing out that, hey, I don't need to go to the gas station. I can just
Mhm.
charge at home. That
Yeah.
is the future that we're going into. Are there
Yeah.
risks in place? 1,000%. Are there risks involved in Tesla? 1,000%. But if this is a risk that I am willing to take because I understand
Definitely. And
better, and
I
it's
shared
okay.
in the group that Professor Aswath Damodaram, he did the valuation of Tesla and he puts it at $150, right? With what is happening, and he's talking about the China. And I like his model to say, look, he says he looks at the intrinsic valuation, the numbers, the valuation, plus the story. So those two things, you have the numbers and the story. Elon Musk is a good storyteller. Like he's talking about these exciting projects, and the same way, the leaders, for these top companies, even if you look at the Nvidia CEO, right? What's his name again?
Jensen,
Jensen,
Jensen.
right? He was speaking at the event this week, right? They are good storytellers, right? But the point is, if you are a good storyteller, the numbers should catch up. If there is that
Exactly.
disparity, may I just finish this one point? If there is that disparity, that's where there is a possibility of the stock tanking. Let's say now, if on the deliveries come very badly, right? Some investors might react, and I'm not saying the stock is not going to go up. So you can say this nice story again and again, right? But as long as the fundamentals and the numbers they don't really align, then there's likely going to be an issue there. That's a point
A
I wanted to
lot
make.
of people are still judging Tesla as a car company. We're looking at car deliveries, and I'm like, that is minute
But
compared to the
AI,
bigger
there are
picture.
other there are other players, right? If you look at AI, there's Palantir, there's Nvidia, of course there's XI, there's Tesla is way ahead as well, right? But
Exactly.
what
It's
I'm
way
saying
ahead.
is the market share. This is something that there are a lot of unknowns, right? And if you watch I think Jeffrey Sachs, no, this guy who do the All In podcast, who is now the crypto czar,
David Sachs.
yeah, they
Yes.
had this conference, right? And it's Peter Thiel, right? His comment is a very, smart person from what I've seen, judging from past investments that he's done. Does he also not make mistakes? He will. He said there are still some new and some things that are really not really known when it comes to AI, right? And you know what DeepSeek story did, right? So what I'm saying is there are risks that are in this game investment
There'll
business,
always be
and there are
risks.
always risks, but you have to
There
manage
will
the
always
risks.
be risks. There will always be risks. But I also like to look at the history of a person, the leadership. We saw what happened this week with NASA with the stranded astronaut.
Oh, that was amazing.
Again, when somebody is able to deliver on an impossible mission,
Yeah, yeah.
you have a track record of giving me and doing the impossible. And when there is a temporary glitch and telling me that, oh, I'm going to judge this company based on the car deliveries, it's such a minute judgment. It's so small that I'm like, look at the bigger picture.
I,
At
I,
risk
I
that we
agree.
cannot even,
Time
like,
will
let me
tell, my
finish what I'm
friend.
saying. Let me finish like, if we look at what Tesla is doing,
Yeah.
again, a lot of people would not understand it. And I don't expect a lot of people to. But personally, as an investor, I look at the track record of somebody. When Elon bought X or Twitter, the same thing. Oh, he's been distracted. Oh, blah, blah, blah. Now, Twitter had so much impact to influence the last election. When you give people the freedom to be able to express themselves, again, I'm not saying that he's going to get everything right. No, he's not. But one thing I believe, when you have a track record of doing the impossible, I tend to look at that. Again, I in full disclosure, I have a limit order for Tesla for $199. I have that in place already, and today
To
Tesla is
say if it goes
249.
there, you are going to sell automatically.
Prepared to buy Tesla at
Oh,
$199.
okay. So what
Today,
I was going
it
to
at
say though,
250.
yeah, I very much agree, and I'm also considering buying Tesla, but probably after they do their earnings and we see, right? Hopefully it's going to drop further. But what I was going to say,
$3.
there are some people who are still holding the bag who got in at 480, right? While we may
You
say this
DCA
is
over time. No,
let me
don't
just
just buy
finish.
at a
Let,
point.
let me just finish the
DCA.
point. Let me just finish. So 480, what I'm saying is it's very possible to lose money in any stock, okay? Whether it's
So
Tesla, whether it's Google. But what I'm saying is, for example, in our group, some people were saying, okay, now it's at 480, right? It's going to go at one to
600.
1,000. May I just finish, okay? Right? And what happened is what we are seeing is Tesla has been dropping in the short term. Over the long term, we don't know, right? And we are going to look at the numbers and the stories. So before we move on to another, and I'm going to give you an opportunity, of course, to comment. It's very, very important to manage risk, right? Because think of it, if someone had gone all in at 480 right now, and most likely some people they might sell because it's almost, I think, more than 40% drop, right? So you had a million there, 400,000 is gone. I mean, if you sell, right? If you realize it. So it's very possible to have those kind of drawdowns and to manage risks. It's very, very important. Understand the stock, make sure you understand the levels to get in, and like you said, sometimes to dollar cost average so that your average can go down. But it's very possible to lose money in the stock
Yes,
market
it's very
as it is
possible to lose
everywhere.
money. Yes, it's very
And I
possible to
wanted us
lose
to
money
talk all
on,
about economic data after you comment this so that you
yeah,
can.
it's very possible to lose money on any stock, whether it's Tesla, Apple, Google, Nvidia, it doesn't really matter. And even if you bought at the top,
Yeah.
you can always average down. People, and this is one of the
What
things
if
that
it
I'm
continues
also
to go
learning.
down?
Again, it's important to understand if you want to be in the business. For
Mhm.
me, I can buy at 400 and I'm still prepared to buy at 150. That is how convinced I am. But if you're not convinced and you bought in because, oh, Tesla at 480 and it's going to go to 1,000, then you're just a trader. You're not an investor.
What if you are
Because to
wrong in your
win,
analysis?
I could be wrong. And that's why I'm prepared to
Okay.
average down if my entry price is wrong. I'm not fixated on a price, I'm fixated on the big picture. Where is this thing going to take me to? It's the same thing people that were looking at Amazon. Amazon dropped 90% in the early days. Amazon is a juggernaut today.
But
We
in
don't
terms
talk
of the
about Amazon
numbers,
as just
I,
one entity.
yeah, but in
Yeah,
terms of the numbers, okay, I think let's move on. But what I was just emphasizing, you can wrap up, my friend. Uh, but what I was just saying, like emphasizing, is that, and you have said that as well. Understand your risk appetite, number one. Always manage your risk as well. Invest in things that you understand and be prepared. If you want to get into stocks that are volatile, don't put in the money that you want to pay rent or for the mortgage next month. Okay?
long term.
Because, yes, right? So those are things that are very, very important. So we are in agreement with that. But as an investor, even Warren Buffett or a lot of other legendary investors, they have been wrong sometimes, even though they were confident. So always have that in mind, whether you're trading and investing. If you want to comment on that, and then we can move on economic data as well. And if you want to give us an update on the crypto market as well, coach.
Yeah, like so whether we are investing in stocks or in crypto, it's important to understand the type of investor that we are. For me, my risk appetite can take investing in Tesla for 5, 10, 15, 20 years. But a lot of people cannot even stay in Tesla for a month. It is 1,000% okay because we're different investors. But what I also want to emphasize is the need again to understand the business. If you
Yeah.
understand the business, you're comfortable with the level of risk, then I'll go for it. But if you know that no, I cannot withstand a 10% drop in the stock, then you have no business being in the stock. Or just again, maybe you just choose an index fund. Always remember, this is not investment or financial advice. These are just two friends talking about what we're
We
excited
are
to
so
talk about
passionate
in
that
the
sometimes we
market.
may have differing opinions,
Now,
but we still respect each other.
just this is what we are passionate about, talking about the stock market. And in crypto, Bitcoin is still all over the map. But if you believe in the long-term thesis for Bitcoin, Kathy Wood, a lot of people will say, oh my gosh, she's been all over the map. Again, I study.
Yeah, but the
If
track
you
record though
believe,
has been,
if you believe, if you
yeah.
believe that this is something, irrespective of Kathy or whoever is saying this, if you believe in basic economics for Bitcoin, the supply is fixed, demand is going up. Where do you expect the price to go eventually? Are we going to have turbulent times? Yes, we're even experiencing one,
Are people
but
losing
is it going
money in crypto? Yes, some are losing money, some are making money. So the
to
important thing is always,
99%?
and yes, that's very, very important. I think at the end of the
Yeah,
day, my friend, there was the Trump coin, the Melania coin. A lot of people, some people they made money, few people, a lot of people, they got smoked, right? So it's very, very important to be careful and to invest in things that you understand, and also the money that you're
Only
willing to, especially
only
in
invest
crypto.
the amount you're willing to lose. So
Yes.
99.99% of crypto is going to go to the toilets.
Yeah.
And even the ones that survive, you need to be strong-hearted to be able to invest in crypto. And that is just my own take. When
Yeah.
we invest in crypto, a lot of people come with the mindset that, oh, I just want to become a millionaire or a multi-millionaire.
Instantly. Yeah.
You still need to know what you're doing in it. So, as much as yes, crypto, yes, you can make a boatload of money, but you can also lose all of your investments. So be careful what you do when you're invested in
Diversification
crypto.
on things that you understand. That's interesting, Coach. Now,
Yes.
if we then look at the economic data that was released this week, there were job numbers as well. I think probably let me just share the screen briefly. So in terms of the economic data here, you see that, the initial job claims, they came higher than last time, but they were lower than the forecast, right? Which is still, it was a good thing, but the Fed manufacturing index, it was above the 8.8 that was forecast, which is uh, something that is very interesting because last time it was 18.1, so there was a drop in the in this index, right? But we always emphasize these are the things to look forward to next week. There's GDP, so next week it's gonna be interesting. But the most important thing, like we always say, I like to look at the long-term perspective. As a trader, I'm so excited about this data being dropped because I can possibly make money from the volatility that can possibly come out of these catalysts and other unknown possibilities. Now, Coach, what do you think? In terms of as we wrap up, if I am someone who is watching this at home and I wanted to invest, I know you don't invest in the Canadian market as I do. What would be certain areas that you would be looking at to invest in the US
Okay,
in the
so
equities
this is
market?
just, yeah, in the equities. If you're just new to investing, I will focus more on the knowledge.
Yes.
Again, I'm going back there, understanding the type of investor that you are. Because if you don't understand the type of investor you are, no matter the recommendation I'm giving you, it's not going to work because we are
Yeah.
two different people. So, number
Yes.
one, invest in knowledge. You can go on YouTube, you can reach out to a practitioner, learn about the market first before you then say, okay, I want to buy this or that. I mean, if you're just starting out, consider some blue chip companies. Again, there's 1,001 blue chip companies, depending on which one that you want to lean more towards. You can just Google a blue chip companies. There are 1,001 in the US. If you're doing blue chip, maybe you can consider some index funds. Again, because you're just starting out. But over time, as you discover and understand the type of investor that you are, then you can have a mix of maybe some individual stocks. For me, in full disclosure, I have Palantir, Tesla, Nvidia, Apple, and also
Apple
MicroStrategy. Those are my long-term
and Bitcoin.
MicroStrategy. Yeah, I mean crypto. I mean, I tend not to mix crypto with
Yeah,
my stocks
equities and crypto.
because I
Yeah.
so but those are my stocks that I own in my core long-term portfolio. But
Yes.
in terms of short-term, I mean those ones I'm not even comfortable talking about them because I'm only in them for just swing trades. But
Yes.
apart from that, those are my long-term stocks. But again, this is what works for me. I don't do index funds, and that is just me. It appeals to the type of person that I am. But for some other
Mhm.
people, it's okay to just do the S&P 500 or the Qs or the SMH. These are just some ways to get exposure to the US equities market. But again,
Mhm.
that stems from, first of all, understanding what you're doing. And once you understand what you're doing, then you can expand your horizon, selling
Yeah.
covered calls and doing other strategies,
The
selling
wheel
catching your
strategy.
foot. Yes.
It's very exciting. I mean, in the interest of full disclosure and for our portfolio now, I had to recalibrate my risk, by, uh, selling some of the stocks that I had, and I was mostly holding like an ETF that is called XUS, and now I'm kind of like now playing individual stocks, and hopefully I'm not going to be banned. That's the thing,
May
right?
the market
Sometimes,
be that figure.
yes, when you think like, oh, now I know I'm gonna be doing, individual stock. So I'm holding like Walmart, Google, Amazon, and I bought Apple in the other stock, in the other account. But the thing is, I am also a trader. So I trade a few stocks that I trade, and I'm also using covered calls to
Mm.
kind of like pivot towards to a more income generating kind of, portfolio, whilst also holding what I believe to be great businesses. But I think I still have a bit of cash. I'm gonna be shopping around. And I think I also have TFII, another stock that I like. That is a Canadian-based business. But I'm gonna see my track record and a small portion in the ETF like XUS and other ETFs in the portfolio. But I think I've moved away from holding a lot of like ETFs, like most as the core position. So now I'm kind of like, I think Blooming has done a good job to convince me to play individual stocks. So I hope it's gonna work out well, my friend. But of course, with my full agreement.
It goes back to what we were just saying. We're still learning. We're students of the
Yeah,
market, and eventually we're gonna pivot and know what we like better. And that's
yeah,
just the market.
yeah,
Me, when I started, there were some stock that I started with,
yeah,
some XYZ, that's block. I'm no longer in that stock. But I
yeah.
had to learn. But there's some stock that I started playing with, maybe some Chinese stocks that I finally exited
Did you
several
ever
years ago.
buy Neo? I did play Neo at some
Yes, I
point.
bought Neo. I bought some Chinese
Oh
stocks
yeah,
and
I did
couldn't
make some
sleep.
money from Neo though, because I started playing it when it was $2 and then it went to like $30. I didn't make a lot of money. This was just a few shares, by the way. But I think, like you said, it really prepared me, and I have plenty of things to be learning, right? That's why I reach out to
Yes.
even experienced people in this business. And one of the lessons that I learned from my call with this fund manager this week was that sometimes it's good to have consistent, steady returns. Morgan Housel said that, and Warren Buffett and Charlie Munger, the late Charlie Munger, compound interest is great. But when I'm investing in stocks, I'm investing in businesses that I
Yeah.
understand that have good fundamentals. And who knows, we could be wrong. Anyways, I know we can talk and talk. And this one, it
It's a
was
long one.
epic. And we were going back and forth. You especially like Tesla. So
I'm a
I
Tesla
was
fan girl,
poking, I
okay?
was poking you. I poked the honestness today. But the good thing is we learn from each other. And she respects my views. I respect her views very much. And at the end of the day, we are not shy to, like, sometimes literally she would say, buddy, I think did you see this news? We should get out of this talk. So that's how good friends we are. We look out for each other. If I see something that I think could be concerning, especially to the holding that my friend will be holding, or another thing, right? Because she would also do the same. So that's what we do. So as we always say, if you haven't subscribed, please make sure you do so that this conversation will go viral with us. We were on fire today, I'm sure. Trade and invest wisely, but we'll see you in the next one. Coach, you can say your
May the market always be in our favor. I always look forward to this conversation every Friday when we have this pod, and it's just interesting. And I'm looking forward to the next one. So
that's
may the
wonderful,
market
my
be in your
friend.
favor.
Thank you so much.